We talked this morning in Money in the Morning about that, about how the studies show that political participation doesn't have a direct connection to how well a community does financially. What determines how a community does financially is your economic culture. Is it frugal or is it frivolous? Sorry, frivolous, or you're just wasting money. Do you value education? Are you into delayed gratification? Because that's all investing is. All investing is the ability to delay gratification. It's the ability to sacrifice today so you can have more tomorrow. Is that your culture? And if you don't feel like it's your culture, if you feel like living for today is kind of the culture that you're surrounded by, well, welcome to the world of poverty because that's pretty much what you get. Because what you get is you have a culture that tells you to enjoy it now, spend it now, live your best life now, and then suffer the consequences later because tomorrow's never going to arrive. And so ultimately, when you talk about money mindset, this is one reason why in our Black Financial Therapy department in the Black Business School we actually have therapists and psychologists that are studying the psychological barriers to building Black wealth. And one of the things we've concluded is that the culture of economic immaturity that's heavily promoted in instant gratification has diluted the ability of the prefrontal cortex to have enough financial consciousness for you to visualize the long-term consequences of choices. So, unfortunately, the result of that is you see a lot of people that are struggling and broke and in bad situations that could have been prevented if they'd had simply taken a more frugal approach or more long-term perspective. And that's all connected to your again, that's connected to your prefrontal cortex, which is a part of your brain that gives you the ability to think long-term and make long-term plans. And studies show that excessive entertainment minimizes the ability of the prefrontal cortex to actually operate properly. So the prefrontal cortex for a lot of people is it's not worked out. It's like a muscle. And if you don't work that out, then you're gonna unfortunately your consciousness gets dropped almost to that of an animal, where animals just react to what's in front of them. They react to the moment. If it tastes good, they're gonna eat it. If the person's attractive, they're gonna have sex with them. And that's what you see a lot of, right? So anyway, let me get back to this topic on Trump's terrible stock. Okay, so Trump's company, as I mentioned, Trump Media is a crappy company, and it says here on CNBC that the stock went up again today, went up another 14%. Holy crap, that's crazy. And it says it rose on election day with traders betting a second Trump presidency would give the business prospects of True Social operator a boost. The stock, which trades under the ticker symbol DJT, is also seen as a proxy for the Republican candidate's prospects of retaking the White House. Shares were up 12.5% in morning trading. Right now, the stock is trading at 39.12 per share, which is just phenomenal, like crazy. I mean, it's insane. It's absolutely insane. Because when you look at the fundamentals of this company, it is not worth what it's trading for. It's really fascinating. And let me show you all a chart of this stock. It's kind of crazy. Look at this. This stock, look at how low it's gotten. It's gotten as low as what, $11 or $12 a share. It's gotten way up here. That's 51. Let's see up here, 49.50. Yeah, so around 49.50. Here it is right now at the very end, right? So this is the last 6 months of the stock. Year to date, this is what you see. The last year, it's a new company, so the data doesn't go back that far. It's got as high as $57 a share, and it looks like it's gotten as low as what's that number down there? It's about 11 or $12 a share. So if you're a Trump supporter, a big Trump fan, then this stock would be a great gauge, a great way for you to financially benefit from your guy winning the election. Again, not judging. I'm not one of those people that beats up somebody because of who they voted for. I just want you to know what's what. All right, now let me give you a few stocks that are said to benefit if Kamala Harris wins the election. One of them is First Solar, FSLR. FSLR, First Solar is a solar energy company, and basically the Democrats are known for operating with a strong investment in solar power, green energy, stuff like that. And so First Solar, let me read up on what the company does. First Solar is it's a solar tech company which engages in the provision of solar modules. It is involved in the design, manufacture, and sale of cadmium telluride solar modules. I don't know what the hell that is, but you don't have to know what that is to know that that is a stock that if you believe Kamala is going to win, this stock is one that is expected to do well. And I do like this stock generally because it seems like it's a quality company. The analysts tend to like it, and etc. All right, another one that has been mentioned, which I don't like so much, is Plug Power. Plug is Plug, and Plug Power, it provides alternative energy technology, but their stock has had some trouble. It's down. Let me see, roughly 62% in the last year. Is trading at only $2.52. I don't like Plug Power. I would not buy it personally. Not telling you what to do, but that's not a stock I would want to buy. Another one that would be expected to do well. Write this down if you're interested. I'm not telling. This is not investing advice, but it's United Health, UNH. Now, United Health engages in the provision of healthcare coverage software and data consultancy services. It operates through the following segments: United Healthcare, Optimum Health, Optimum Insight, and Optum RX. The United Healthcare segment utilizes Optum's capabilities to help coordinate patient care, improve affordability of medical care, analyze cost trends, etc. And the belief is that that Kamala would expand healthcare access that could benefit healthcare providers, et cetera, et cetera, et cetera. Now, just to show you how easy it is to buy stock and how quick it is, I like United Healthcare no matter who wins, actually. So I'm going to buy some shares of this. So here I am in my E-Trade. This is how I buy stock, right? So this is how I think you should think about stock. Think about it like going to the grocery store. You don't remember every time you went to shop for vegetables or food, do you? Right? So you probably won't remember every time you bought stock. So I won't remember this. I already know 3 months from now, if you say, "Hey, Boyce, remember the day you bought United Healthcare?" I'm gonna say, "What are you talking about? I don't remember." But what I'm gonna do is I'm gonna buy. It's expensive. It's 565. Remember on Robinhood though, you could buy fractional shares. So you don't have to buy a whole $565 share. You could buy $50 worth, $100 worth, whatever, right? So I'm gonna buy like maybe 3 shares because it's kind of an expensive stock. So let me pick market. I'm picking the market price. That's 16.98. Done. I'm now in the healthcare business. Okay, it's that quick, it's that simple. Okay, now if you want to know what stocks would probably benefit if Trump wins. One is DJT. We talked about that. I'm not touching that stock because it's garbage, and I don't believe in buying garbage companies long term. I just don't, unless you want to gamble and possibly lose money. Exxon Mobil. Now that's a stronger company that has a stronger reputation that would benefit from the whole drill baby drill thing that Trump has been saying. And if I look at this stock, it's okay. It's not bad. I don't know if it would be a great stock, but it's gone up about 18% in the last or this year. The last year it's gone up 10%. The last 5 years it's gone up 70%. ExxonMobil to me is more of a cash cow long-term investment. It's not a company that's going to make you rich. It's more so a company that will keep you rich. It'll keep you rich, but I don't think it'll make you rich because cash cows don't grow very much. Most of their value is already there, but it is the kind of company such that if you lucked out and saw a market decline for some period of time, that might be a stock to buy because you're getting value. You're getting a quality company, and sometimes quality companies get hit hard when the market declines. One that I also like, that I'm actually going to buy right now that would benefit from a Trump victory is JP Morgan Chase. That ticker symbol is JPM, and JP Morgan is an investment banker, and the standard or the belief with that is that Trump has a position on deregulation, and deregulation tends to accelerate the profitability of big banks. A lot of big banks and corporations, they don't like to be regulated. Tech companies don't like to be regulated. So JP Morgan would be a beneficiary from a Trump presidency. So where you position in the economy kind of determines how you feel about one candidate over the other. So I'm gonna buy me some shares of JP Morgan, put it in the portfolio, and I might own this stock until the kids are grown and be able to pass them ownership in JP Morgan when they get older. Okay. So feel free to take a look at that. Not investing advice, but this is what I see. This is what I believe. Okay. So what I'm going to do now is I'm going to answer some of your questions in the Q&A section. And I also want to remind you that if you log in at theblackstockmarket.com, theblackstockmarket.com is where you can find previous lectures. You can also find a lot of the recommendations recommendations. If you look under what Dr. Boyce is buying, there's a whole section on stocks that I like, stocks that I've, and most of these investments are companies that I expect to do well in the next 3 to 5 years. So they're not overnight. I don't do fast money. We're not doing the fast, quick, easy money because that's not real money. That's not sturdy money. This is more longer term money, long term wealth. And the best way to become a good investor is to just be a consistent investor. And also, I would encourage you to be cautious about penny stocks. A lot of people get, I was at the convention and there was a kid that was 19 and he told me he wanted to be an investor and he was already investing. I said, well, what are you investing in? And he mentioned a penny stock. He said he does a lot of penny stocks. And I said, well, you got to be really careful about penny stocks because they're very tempting because they're cheap, but they're also just crappy because the companies may not have, they just may not have the kind of infrastructure uh, to be stable, and also the market is really bad. So you can be hit really hard by the high transactions costs in that market, the bid ask spreads, the liquidity. Liquidity is something that doesn't get discussed very often when it comes to investing, but liquidity is really important. For example, those of you that do stock options with us, we've talked about that in class. That the best thing about the stock options investment, when you're selling the options, is the liquidity of the investment. This makes it better than most real estate deals. This makes it better than most businesses you might want to start. And the part about not having to do any work to make your money is even better. And so that's something, just to kind of think about when you're making an investment. So I don't do penny stocks. I don't do crazy cryptos. I think if you're going to do crypto, I would start with the top, start with the safe stuff, the Bitcoin, the Ethereum, the stuff that looks like it has a solid upward trajectory. And then also with stock investing at the S&P 500, the best bet you have out here. And another thing too is that there's a strong belief that this market is overvalued. So the fact that the market's overvalued means that at some point there could be a decline or a crash. I know this week the Fed is going to make another decision on, they're going to make another policy announcement, and so these are the kinds of things that if there's some little indicator that the economy is not as strong as they thought, then don't be surprised if the market just goes kaboom. Because there are a lot of investors that have been making a lot of money who are ready to sell at any moment. Sorry, at any point when anything goes wrong, they're going to be out. So you got to be really careful about that and really make sure you protect and diversify, and then maybe have some money on the side to save for an investment. Like Warren Buffett ironically, famously, has over $180 billion right now that he's just sitting on and he's not investing any of it. So it's really interesting because, this guy's got all this money and he's this great investor. And you're like, why are you not investing? A lot of people are wondering that. And I think it's because he's waiting for the crash that I was just talking to you all about. So just be really careful. Sort of be ready for whatever might be coming. If you're selling stock options, this market is a crash market is a great market for selling stock options because it protects you from some of the losses that everybody else will experience. Okay. All right, so let me hop in here and answer some of your questions. Put your question in the Q&A section, and I will answer that question. And also, I saw one of you were asking about my books and stuff like that. If you go to drboycebooks.com, that's where we have my book, The 10 Commandments of Black Economic Power. So if you haven't gotten a copy of that, feel free to go there and take a look. Also, if you're interested, if you're just getting started with money and you're trying to find a good place to start, we have something called Black Money 101. So if you go to blackmoney101.com, you can also take a look and see what that looks like. All right, what are your thoughts on the SCMI? Ask Keon. SCMI,